Hello everyone, how's everyone doing? I hope everyone's having a good week. And yeah, today we're going to be going over current week outlook. And yeah, that's it. So let's get into it. The first thing I want to do before getting into the outlook is reviewing the news calendar for week of Monday, 8/9/2024. So Monday, orange news, which I'm not too worried about. Tuesday, no news. And then Wednesday, we have FOMC mini minutes on 2 p.m. Thursday, unemployment claims and flash manufacturing PMI. And then Friday, we have Fed Chair Powell speaking. And yeah, it's an odd week. I would say Monday is going to be tape reading only, no trades. Tuesday as well. For Wednesday, I doubt I'm going to get any trades, but I'll be looking primarily after 2 p.m. And I'll also be tape reading the pre-market. Not pre-market. Before 2 p.m. So just the AM lunch. And I'm probably going to go live on Wednesday and tape read on live because I haven't done a live in a moment. And I want to get back into it. Okay, and Thursday should be good. Unemployment claims and flash manufacturing PMI, both at decent times. So shouldn't be too bad. Friday as well. Looking to be having at least 2 trading days. And if we do get a trade on Wednesday, then that will be good as well. So just Monday and Tuesday, no trades. Just tape reading. And pre 2 p.m. for Wednesday, tape read as well. So let's get into the outlook. First, I want to do the EOD first. Here. For the previous week, we had the buy side draw. We got really close to it, but we didn't quite tap it. And right now we have new conditions for whether we want to reach into that buy side level or not. And we're going to be going over it on this week's outlook. So for the Nasdaq, let's start off on the monthly. Notice the monthly area here. Actually, I want to read what I have written down first. So the big push lower we had the last 2 weeks was back into an array that we moved back into around 4 months ago. And notice the next mitigation block giving us an access to. So basically, we had a mitigation block after tapping into this gap here. We failed to take the range low, and we have a huge wick higher, respecting this gap here, and respecting this mitigation block within a discount. The weekly will tell us a bigger story. Typo right there. Okay. I'll read this, then I'll move into the chart and I'll explain it in an easier way. So the mitigation block to the left of the screen was briefly tapped into and then delivered us higher. Notice the breakaway gap and the importance it holds. It acts as evident price to be referred to later. Or when an objective is met. What objective was met? I have so many typos here. Was met. Price had to go lower and sweep the initial mitigation low, tapping into the monthly array in the process, as well as filling the new week opening gaps that were left opened. So notice on the weekly time frame, it gives us a bigger kind of framework that we can add onto the monthly. So what we were first talking about within this mitigation block, once it first got engulfed, we got this slight move into it and into this gap here. We left a new week opening gap here, a new week opening gap here, which needed to be filled, which we did fulfill within the previous week. So notice the breakaway gap that we had on the week. These breakaway gaps will act as places that price will refer to when a higher time frame objective is met, or when a higher time frame area and price wants to be met first before moving to the breakaway gap. So where did price want to meet? It wanted to meet, first of all, this low here, which was important sell-side liquidity. It wanted to meet these small new week opening gaps, and it also wanted to meet another array here for whatever reason it found that it needed to tap into this monthly array again. After we took this liquidity, moved into the mitigation block and respected it, and into this monthly array, and there's a low time frame SMT within these lows. There's another low in there. We pushed higher and we inversed a discounted fair value gap. So, on a weekly basis, obviously the next draw would be the breakaway gap. So you can kind of connect the dots and see that, okay, we met our objective. Breakaway gaps are places prices want to refer to after objective is met, and now we might see the breakaway gap on a weekly basis without considering lower time frame. So here, a draw for the weekly time frame alone without considering lower time frame is the breakaway gap, but we still have not went into the daily or 4 hour, but it is something to keep in mind. So so here is the thing that I was talking about, the SMT that we have in between these lower time frame lows after we had the push lower, inversing the gap that we spoke about here. So this is daily time frame. Let me read what I wrote and then we'll get into this picture. Daily adds onto the weekly onto the weekly. Notice the breaker that we had from last week getting run through. We use the same premise that the weekly chart had to meet the objective of sweeping the initial mitigation low, and we apply it to the daily chart. That mitigation into the fair value gap as an initial one, looking to take a second one. Whether we are bearish or bullish, I believe that the high is going to be taken. It was my previous week draw and we traded towards it. If we are bearish and my analysis is incorrect, then we take that high as buy side and push lower. If my analysis is correct and we take the high and push through it towards the breakaway, then notice in both cases we do take the buy side. So basically what I'm saying here is that the premise that we had on the weekly chart, which we just on, that we had to sweep the initial mitigation low and tap into a mitigation block, is happening just flipped on the daily chart. So you see we have a buy side draw into a into a fair value gap, into a dealing range discount from this high to this low, and we also have a small mitigation block here that was tapped into. And what does price do to initial mitigations? It often goes back and it sweeps them to create a breaker. And referring to a breaker that was formed on last week, which we have a high, low, higher, high, lower, low, you can see that price ran through it pretty violently once reaching a point of interception, which was this monthly array. And this tells us that there's a big switch in order flow, and if a premium array within this range here is not going to be respected, it's going to probably hunt the buy side liquidity. So this is another extra add-on that would add to the idea that buy side is going to be taken. And I forgot to mention, even if this analysis is incorrect and there is something that I do not see or do not know, and we are bearish and we're only going to reach the premium breakaway gap, then in both cases, even if we do want to go lower, what's price going to do? It's going to hunt buy side and then go lower to hunt sell side. If we do want to go higher, what's price going to do? It's going to take buy side, run through it, and go to the premium breakaway gap. So in both cases, I'm confident that we are going to take buy side. So another idea that comes to mind when looking at this chart is the breaker being created. Note the low of the breaker as a low, then high, which is labeled as buy side, then a lower low, interrupting a liquidity sweep, and the SMT and a monthly array that leads us pushing higher, inversing the breaker and the gaps within them. This leads me to believe that this gives us a high probability that the buy side will get taken, and then that would give us a breaker that will push lower into the monthly array as an order block. Also, there was a unfilled new day opening gap higher. Wait, I think I made a mistake here, and then that will give us a breaker and that push lower into the monthly array. That's an order block. I don't know what happened there, but what I'm trying to say is that notice this breaker here. If we do take this buy side, it's going to give us another breaker. And as I just mentioned, if we are bearish and my bias is wrong, then this breaker will be used to turtle soup. But if my bias is correct and we are going to see higher prices, then notice what's going to happen here. We have a low, high, lower low, and then this run higher here. What would it do? It would create a higher high. And the significance that this lower low holds, being at a monthly array, having an SMT and taking a form of liquidity, just makes it all in all high probability. And especially us running through this breaker, it gives us kind of no space to have any bearish anticipation. So there's another anticipation breaker here, which would be taking this high. And once we get that high, price can refer. Oh yeah, what I was trying to say is that I remember what I was trying to say now. I'm trying to say that this push lower here would then be referred to as an order block, and then probably see this breakaway gap. And if we do respect that, then we see lower. If we don't respect it, we're gonna see the range high. So this breaker here plays a big role in deciding whether we're bearish or whether we're bullish, because once we do take this high, which I'm fairly confident in, actually not fairly, very or highly confident in, it's going to decide whether we treat the breaker as a soup or we treat the breaker as a market shift and we see higher prices. I will throw in a screenshot of the 4-hour time frame. Oh, I forgot to mention about the unfilled new day opening gap, which is this small gap here that has not been filled into. So that's another draw on liquidity that we can seek to trade into if price does remain bullish. I will throw in a screenshot of the 4-hour time frame, but there isn't much going on, and it's even more in depth on the 1-hour time frame. So use the 4-hour just to look at it. You can notice the buy side leading the opening gap and the breaker that was heavily pushed through with this 4-hour gap here. Many people thought that price would react off of this gap, but I knew going into the week that this gap should be going to push through, and I was not afraid to take longs within this area of price action. So here's the hourly chart. I'm going to read it, then I'm going to simplify it. Notice what's happening on the hourly chart. The same concept that happened on the weekly and the daily, the initial mitigation high into that gap has been bridged, and we use the assistance of the gap that it's in to determine whether this would be a market shift or a move towards the blue line as a buy side draw that we recently spoke about, or if we respect the gap, make this a purge on liquidity and meet lower prices. Most likely the intermediate term low shown as, and if that happens, then a different story would be containing a breaker downside. So I want to go back to a screenshot that we recently went through, which is this buy side liquidity. You know how we said either we market shift through it or we treat it as a liquidity sweep, respecting the new day opening gap or unrespecting this gap, or we shift through it and then we disrespect the new day opening gap and disrespect this gap here. The same exact premises happen here. Notice the buy side liquidity that we just ran, the same premise that I'm anticipating to happen here with this buy side liquidity being ran. As it's being run, it's within a hourly gap. You know, it's either a liquidity sweep or it's a market shift, depending on whether or not we respect this gap here. So gaps in, not gaps, liquidity within arrays is honestly my favorite type of liquidity, and it's the only type of liquidity that I would ever try to find market shifts or liquidity sweeps within, because it tells a bigger story than just seeing a random low, like for example this one here, and thinking it's a sweep. This array here holds big significance in whether we reach this high or not, and this is the weekly open, by the way, and it created a new week opening gap. That price might maybe invert this and then fill the new week opening gap and then start to move higher, or price can have a first manipulation acting like it is going to respect this gap, then push lower into the new week opening gap, find support off of this level, and then push through it and invert the gap. So we might see something like this, like a fake sweep, a push lower into new week opening gap, and then a push higher, giving us, by the way, another breaker framework. Okay, so we're going to be talking about dollar now. So the same story as we had before is going to be visibly hard for Nasdaq to move on the monthly, considering the dollar has been ranging within 2 arrays. So a couple of videos back we mentioned how the dollar was on the monthly ranging between this gap here and between this gap here, and it's still continuing to do the same thing with failure to deliver from this gap here towards the high. So it's really I'm not gonna say one-sided. It's rangy. I don't like it a lot, and I'm not too worried about it, but it's something to consider. And I want to speak about the weekly time frame, which did have something showing us bearish continuation. So I'm gonna read this. However, something that we had leaned to a couple of weeks back is this price action here between a bearish gap and a bullish. So many typos. And a bullish gap. It seems that the bearish one came out on top, this would make it easier for Nasdaq to move higher on the weekly. So the only thing supporting Nasdaq moving higher based on the dollar is that we were in between this gap here, which we failed to move into the discount of within this dealing range. And this tells me that we find urgency in going lower and we don't have time to reach into discount. Then, as you can see, reaching into this gap here, we find to displace through an otherwise discounted gap on a higher time frame, which would be used to deliver higher. But what happens here? We push through it and we start to hunt side, we hunt sell side here, and we seem to be pushing through it and not treating it as a liquidity sweep. But a area that I have in mind is this small gap here, so I'll be looking to see what price does once it reaches into that place. So here is the daily time frame as well, off of that reaction lower, and this is where we sweep liquidity. I would have considered this as a liquidity sweep if we didn't have this piece of price action here, where we run through a volume imbalance and we sweep low resistance liquidity, and we also have volume imbalance here that was tapped into, and we engineered sell side before tapping into it, and so this is sell side liquidity that would be in mind to be taken. Now moving into the bond market, you can notice that technically it does look like it wants to push lower, even though it has been pushing higher for the past few months. Well, I want to speak about it fundamentally. The reason bond futures have been going up is because of the speculation of rate cuts at the base on September, which causes people to buy bonds. So this push higher into the volume imbalance would align with the idea of the public thinking that there will be September rate cuts, which causes them to buy bonds and spend, and this would mean that there is money coming out of the Nasdaq and going into the bond market. But what price action is telling me is that this is soon to be reversed. With the stock market crash, and I say that in quotations, that we had last month, or no, sorry, not last month, the last 2 weeks. It was honestly just market panic, and I saw lots of news headlines saying, "Oh, the stock market has crashed." But I honestly believe that it aligns with the premise of the people thinking that the Fed will cut rates. Because what did this do? The premise of the stock market crashing, with people with small scopes on price action, did not notice that the reason that technically the drop that happened on Nasdaq, why did it happen? It happened for every reason that we mentioned: to sweep liquidity, to mitigate the monthly array, and to create the SMT at these lows. I'll go back and I'll show you here. So the entire reason that we had this big drop lower, especially within this week here, is not because the stock market was crashing. It was because we had to meet high time frame objectives. And the same thing within the bond market. You can see the fundamental, the same way we were talking about the tech sector, Nasdaq, it pushing lower from global, or kind of what's the word for it, for the market logic that we're going to cut rates. People have been going out and buying bonds, and this caused a push higher here. And it fits with the idea that the September rate cut isn't probably going to happen, because technically speaking, what price action is telling me is that we do want to move lower. Again, using the same concept as we did on the Nasdaq, we have the intermediate term high here within a gap, and also volume imbalance here. Whether we respect that gap and start pushing lower and treating this as a soup, which I'm anticipating and I think is the most probable scenario, then that's gonna happen. And this gets confirmed on my weekly chart. So you can see there is signs of resistance off of that volume imbalance within that liquidity sweep on a daily time frame, telling me that we're probably going to see lower prices for the bond market. So the same premise as the stock market crashing, it was to meet objectives. The bond market pumping, and people are being happy with the bonds that they bought, thinking September rate cuts are going to happen. They are driven up for a reason, and they will go down for a reason. The Nasdaq, the momentary drop lower that had people anticipating a stock market crash, it dropped for a reason and will go back up for another reason. Hope that makes sense. So price action is telling me otherwise, but I'm confused since my drop in Nasdaq, which is a high risk asset, is higher, and the market speculation that rates are near, are also driving up bonds. However, if the case of September rate cuts was real, which is not, then I would doubt my draw on the Nasdaq, but I'm sure this buying of bonds will slow down. Basically, what I was saying right now, this push higher on the bond market was for a reason, and it will go down for a reason. The push lower on the Nasdaq was for a reason, and it will go back higher for a reason. Fundamentally and technically, you can blend both of the concepts together. Fundamentally, for the Nasdaq is because the Nasdaq is not in a position where it's going to crash. We're not in a position where we have a economic recession coming on, and the stock market is not going to crash. There's no reason for it to crash. There's no World War III going on. There's nothing fundamentally happening that would be a reason for the stock market to crash. And technically, the reason that it's not going to move lower is because of the reasons that I highlighted before. We have many arrays supporting it. We have a market analysis based on purely price action supporting the idea of moving higher, and with the whole reason that we didn't move lower was contradictory to public opinion, is because we had to meet price objectives, and that's purely it. Now, bleeding this into the bond market, this push higher here is anticipation for September rate cuts. This push higher is happening fundamentally because people, the general public, they're thinking, okay, we're gonna cut rates, buy bonds, get loans, start spending. We're gonna have a rate cut sooner or later, and which I do not believe. And the fundamental reason for this, which also bleeds into the price action of it, is that this push higher here was for people to be excited and for people to be confirmed and say, yes, we're going to get a rate cut in September. We can see it by how the bonds are pushing up. But why is it pushing up? It's pushing up for a reason, to meet our objective, to then later push down, meeting the true fundamental aspect of it, and also confirming the technical aspect of it. So it's interesting things, and if anyone is disagreeing, or if anyone doesn't agree with what I'm saying, you can leave it in the comments, and I will do my best to answer. And if anyone has any questions, you can comment down below, and I'll try my best to answer it for you. And that's going to be it for this video. I thank you all for watching this video, and if you made it this far, just thank you. Okay, so I hope everyone has a good trading week, and I'll see you on Wednesday when I live stream pre-FOMC tape reading. Goodbye.